Now I've actually hidden what this actually is, and it's something that I used to do a lot when I first started doing technical analysis back in the early 80s. When you look at enough charts for long enough, you start to see things that look similar to other things, and you go, well, if this looks like what happened there, then this is what's going to happen to this one in the future. And I learned pretty quickly that it's a silly thing to do, because your brain's just very, very good at seeing things that are similar. So I wouldn't normally do this, and the only reason I'm actually doing it is because I actually do have a signal on this item, which I did back in June, about where I thought there might be a top. So that's really the only reason I'm doing this. But what you can see is that this item has actually gone into a trading range. You can see this kind of, the bottom of it's down here, and the top of it's up is here. And one of the things in technical analysis which I don't agree with is that when things break out of trading ranges, which this one looks like it's about to do, then they tend to go higher. I tend to find that they do go higher. The problem is it doesn't last, and it comes back to at least the middle of the trading range, or even lower. So I don't find they're a good time to buy the market. But one of Gann's rules, this is, if you go to the same level for a fourth time, you tend to break through. Now if you look at this, it kind of looks like 1, 2, 3. That probably looks like the fourth time. That's the first, that's the second, that's the third, and it didn't break through in the fourth. And like all these things are a bit subjective, but you could also kind of say that that's kind of like 1 top, 2 tops. So you can interpret charts any way you want, and it's always better with the benefit of hindsight. But I think the one thing that we can say is that we look like if we do go through here, then we're going to go higher. Okay, now let's look at another chart. Now here's another chart, and I think it looks pretty much like the one that I've just gone and shown you. And in this case I think it's a bit more obvious about what's kind of happening. We've got the trading range, and we've got 1 top here, 2 tops here, the 3rd top is here, and Gann said if you go up to the same level for a 4th time, you tend to break through to the upside, and if it went back down again to the bottom of this trading range, it would probably break down to the downside. So I think that's quite close to what I've just shown you. So let's go back to the previous chart. So this is the previous chart we looked at. So we'll let you come to your own conclusions about this, because like I said, I don't really do this a lot, because you tend to see what you want to see. But personally, I actually think that they're very similar. And in fact the clue is that they're both exactly the same item. But one was in the past and one is basically now. So this is the one that was in the past. Let's actually see what actually happens to it. The market goes up, it breaks through on a 4th attempt, goes sideways, we have a last spurt, and then the market stops. Then the market starts to come down, slowly at first, then there's a rally, and then the market collapses. And in fact that's the bottom. And in fact from the high that we had here, if we do Gann's most important percentage, you can see that it was a fall of 50%, which might give you a clue to what we're actually looking at.